Really, really interesting. Thanks for all that perspective on this, Sonia. Let's take the conversation forward. Prakash Diwan is joining us. Prakash, good afternoon. I wanted to say happy Friday. I don't know if it is a happy Friday or not. But let's actually kick it off with Tata Motors, right? Very interesting developments coming in over there. Your thoughts and on really what the stock itself has in store, because the last 6-7 months it's in a trading range. You trade the rallies well, you make money, but it stalls at around this 450 level.
Good afternoon, Surbheet. So, yeah, Fridays are always happy. So, happy Friday to you as well. And, I think Tata Motors is gone through a beautiful consolidation in terms of not just its shareholding, not the share behavior, but also the business itself. So, what has it done? It has, started very clearly 2 years back when they forayed into the EV segment. They were the first people actually skeptical whether they will be able to lead that whole EV drive all by themselves when other players were still taking a back seat and just watching on the sidelines. But when the competition between the Mahindras and Tatas actually took off, and Tata started coming down on the price point. So they started off with a 16-15 lakh car, and now they have a 7-8 lakh car as well, which is fully EV run. So that's something which they have done in terms of the portfolio consolidation. They've done a lot of work around the design part of most of their cars. And you've seen very clearly how the supply side is also been kind of managed so beautifully. Now, this consolidation of the business is something which will start paying results as they reduce debt, and it's a significant amount of debt. So we've seen what happened to Tata Steel when it reduced debt, or to Reliance when it became net debt free. A similar move in Tata Motors is definitely in the offing, is my guess. And the European slowdown is impacting a lot of the high value sales from the JLR stable. I mean, we know that the Velar and all of that, which contributed so much to improvement in margins in 2021-22, is no more there. So there will be some time that it takes for that to come back. But if somebody is willing to be patient enough and keep on adding this stock on dips, I think it will go through what Mahindra M&M went through from the 680, 750 zones all the way to 1300. So you will probably see a very strong move, but it could still continue with a bit of time correction, so is my guess. And of course, this whole thing of Tata Tech offer for sale is something which helps them reduce that debt and actually become net debt free is in that time frame that they're talking about.
Just one follow-up question, Prakash, on Tata Tech. What kind of valuations do you think we should start ascribing? Should it be trading at the valuations of an IT services company like TCS, or higher, like a Tata Elxsi, which does more engineering R&D and it commands a higher valuation premium? Where does Tata Tech fit in the valuation scheme? And secondly, even Tata Tech provides a lot of technology, the software design for Tata Motors JLR, which is one of the key captive clients of Tata Tech. So aren't there a lot of synergies?
No, interesting. I knew with you around, there would be a question on Tata Tech specifically. But so to answer your questions, my sense is that 20,000 crore valuation that seems to be what I'm hearing in terms of the IPO this thing valuations as derivatives is very clearly telling you that they're trying to position it somewhere between a pure tech services company like a TCS. Of course, TCS is a different pedigree and the scale is very different, and a product or engineering focused solutions company like a Tata Elxsi. It's somewhere in between the two. So the simple reason that they have a lot of, if you see their annual their balance sheet and the P&Ls for the last couple of years, very clearly there has been a lot of bread and butter business which comes from very stable maintenance kind of businesses, right? Which they've been doing for implementing across every product launch. So if you see a product launch, there is lumpiness in the revenue which happens every time a new product platform is launched for Tata Motors or for the JLR portfolio, and that's very clearly maintained subsequently. Where I think they will add a lot of value is once they start giving access to this technology to a lot of other players who are getting into the EV space, so which would not possibly be in India, but it could be elsewhere. So I think it will start doing what a Tata Communication has done to globalize itself with solutions that were homegrown or derived from their home experience and then taken it to the global platform. So if they were to successfully do that, the dependence on this captive market of JLR itself and Tata Motors itself could probably be a little bit of it will come down, and that's something which the market will like, because if you have revenue coming from other players who are absorbing your technology and your solution, then you have better ROEs coming through, a better margin profile that could improve. So I think they'll probably get their act together in that sense. They need to get out of this Tata Motors stable and start unfolding the potential, or unlocking the potential and being on their own. So that I think is what the IPO could probably herald or could signal. But I think it'll probably be valuation wise, it'll probably be not as rich as Tata Elxsi, or not probably as soft as TCS, or probably closer to TCS in good times. I mean, TCS also has gone through a little bit of a shake-off, but I think Tata Tech will offer some sort of unique, platforms, unique solutions that the market will probably start according some significant value.
All right, Prakash, people are looking for value in the broader markets as well. And we had two very interesting conversations here on the channel with a couple of managements. I don't know whether you track any of them. One is Som Distilleries. The management sounded very, very confident. They're talking about big market share in the beer market.
Yeah.
And the other one is Religare Enterprises. They as well are talking about unlocking value via an IPO on Care Health. They were talking about, ramping up the brokerage business as well. Any view on either of these two companies? Because, this week itself, these stocks have done well, actually.
That's true. No, I did catch. I missed out on the Religare interaction, Nigel, but I did catch the morning interaction yesterday on the Som Distillery management interaction you had. And very interesting that you picked up something like this, because, in the consumption theme, where we're seeing a lot of contraction for FMCG, FMEG kind of products, this is one discretionary segment which is continuously grown at fairly decent rate. There has been a moderation even in that, even after COVID, when the HoReCa segment, which is the hotel, restaurant, catering segment, started off. The in-house consumption segment or takeaway segment actually has not grown as much. But what's working for some smaller players like this is the stupendous growth in market share that they've had. Their products have reached a level of superiority, and I can vouch for this. When I was in Karnataka some time back, and they have a significant presence there, I could see their product fly off the shelf in most of the shops when I visited. And it was interesting to know the kind of recall that it is developed just by the sheer superiority of the product. And of course, they're competing with multinationals like Budweiser, Carlsberg, Heineken, but still they've managed to hold on their own. And that is something which is very interesting. So hopefully, companies like this, which have got their act together on making sure that the product at the right price and distributed well, and manage their working capital around it effectively, and they've done this capex and all of that, which is sounded so confident of. I think it's a great story in the making. There's no doubt about that. On the Religare side, the OTS that I read about yesterday very clearly tells you probably it's a last round of cleansing which was required in terms of, or an obstacle that was needed to be crossed for the company to be able to start doing, something related to unlocking the IPO, the valuation from the health insurance business. And it's a fairly remarkably positive business. There is element of private equity there. So there are investors who have been patient enough, whether it's Kedara Capital or, some of the other late entrants, the Burman family, all of them have put in a lot of money into this business. And there could be some sort of semblance of value unlocking that will come through. But, the time factor is something which you need to live with. You really don't know whether it's going to happen in the next 6 months or it'll take the next 2 years. So that is the only issue. But it does seem to have bottomed out in terms of whatever ifs and buts it had in terms of the restructuring that has been underway for the last 2 years.
All right, got that. Prakash, stay on. We have more questions for you. Do have to take a break for the time being. And as we take this break, here's a quick programming reminder. On the 14th of March, CNBC-TV18 will host what will be India's largest summit on gender parity. This takes place in Delhi. Women leaders from all walks of life will come together to brainstorm and help take decisive steps to bridge the gender inequality that exists in India and across the world. The event starts out at 4:30 p.m. on the 14th of March. And of course, you can catch all the action live right here on CNBC-TV18.
When our